Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoan, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
Today, we're kicking off with some concerning news from RBC's recent earnings report. The bank has reported rising mortgage delinquencies, with the Greater Toronto Area leading the way. This is a significant development, especially considering the current economic climate.
Yes, Steve. According to RBC's second quarter earnings, the 90-day past due rates have climbed to 30 basis points, up from 28 basis points in the first quarter. And just a year ago, it was only 19 basis points. It seems like the high interest rates are really starting to weigh on borrowers, particularly in areas like the GTA.
That's right, Janine. The Chief Risk Officer at RBC, Graham Hepworth, mentioned that the rising strain is not linked to their recent acquisition of HSBC Canada's mortgage portfolio. Instead, it's the existing clients in regions like the GTA who are more exposed to the payment shock from higher borrowing costs.
It's concerning to think about the challenges families might be facing with these higher payments. However, it's somewhat reassuring to hear that overall borrower quality remains strong, with a majority having high credit scores and a healthy equity cushion.
Indeed, Janine. Nearly two-thirds of RBC's mortgage clients have credit scores above 785, and most have a healthy equity cushion. Just 7% of the mortgage book has a combined loan-to-value above 80%, while almost 60% is under 65%. This suggests that while there are challenges, many clients are still in a strong position.
Beyond residential lending, RBC is also keeping a close watch on other areas of its real estate portfolio, like the high-rise condo segment and commercial real estate. They're monitoring the risk of further slowdown, especially in regions hit hard by economic weakness.
Yes, and Hepworth mentioned that RBC has built higher loan loss allowances in areas where they see elevated risk. For the condo developer segment, RBC's exposure is relatively small, and they've focused on top-tier developers with conservative underwriting.
It's good to know they're taking precautions. On the commercial side, there was a significant increase in gross impaired loans, largely due to weaknesses in U.S. office markets and the insolvency of a major Canadian retailer. This also impacted related commercial real estate exposures.
That's correct, Janine. Some of the increase in impairments was linked to administrative issues that have since been resolved. Overall, RBC seems to be navigating these challenges with a focus on maintaining strong borrower quality and strategic monitoring. Our next topic is about the growing inequality in home ownership across Canada, which is becoming increasingly evident. A recent study conducted by Yushu Ju from Simon Fraser University highlights the challenges many Canadians face in achieving the dream of home ownership.
Yes, Steve. Home ownership is often seen as a symbol of success and is linked to various life opportunities, like starting a family or building wealth. However, deteriorating affordability in recent years has made home ownership a distant dream for many Canadians.
The study indicates that while the probability of an average Canadian household owning a home improved steadily from 1991 to 2011, it has since declined. This decline is concerning because it suggests that the gains made in the past are being eroded.
Exactly. The report points out that this trend is largely driven by rising mortgage debt. Home ownership growth was primarily supported by mortgage debt, which isn't sustainable in the long run, especially with the financialization of housing, treating it more as an investment than a social good.
That's a critical point, Janine. The shift towards viewing housing as an investment has indeed changed the landscape. The federal government's move away from funding social housing and the commercialization of the Canada Mortgage and Housing Corporation has played a role in this.
And the inequalities are growing. Younger generations like millennials and Gen Z are facing greater affordability pressures compared to older generations. The study shows that while home ownership rates improved for all age cohorts until 2011, they've since declined for those under 45.
It's interesting to note that while older homeowners are also facing affordability issues, with more holding mortgages later in life, the disparities among different income groups are stark. The top income earners have better chances of owning homes, while lower income groups struggle due to lower incomes and sometimes discrimination in access to credit.
Absolutely, Steve. The study also highlights that the financial security associated with home ownership is being undermined by rising housing costs. This is particularly challenging for low and moderate income homeowners who have seen their housing costs increase much faster than their incomes.
Manuel Albers, a human geography professor, suggests that homeownership has shifted from being a policy goal to rhetoric, primarily serving to sustain mortgage and financial markets. This highlights the need for policies that create a fairer housing market and provide diverse housing options.
Yes, we need policies that enhance housing security for renters and support nonprofits and social enterprises in meeting the diverse needs of income groups. It's crucial to address these inequalities to ensure everyone has the opportunity to achieve their home ownership dreams.
In our final segment today, we turn our attention to Barrie, Ontario, where a significant real estate development is facing some serious hurdles. The old Fairgrounds property, a site slated for a massive residential project, has been placed in receivership, according to court documents from the Ontario Superior Court of Justice.
That's right, Steve. This site at Essa Road and Highway 400 was supposed to be transformed into one of Barrie's largest residential developments. The developer, Greenworld Construction, planned to build between 3,185 and 3,235 residences on 55.3 acres, including high-rise towers and townhouses, plus commercial spaces and amenities.
However, financial troubles have hit hard. Greenworld, which purchased the property for $48 million in 2022, has defaulted on its vendor take-back mortgage payments. The senior secured lenders, Osmington and a numbered Ontario company, have been forced to seek a receivership order due to these repeated defaults.
It's a tough situation, Steve. The court documents show that Greenworld has already paid $6.75 million of the remaining principal, but still owes around $31.7 million, not including the accumulating interest and fees. It seems they've been unable to secure alternative financing, leading to this unfortunate outcome.
The receiver, KSV Restructuring, has been appointed to manage the property. While this might offer a structured path forward, the future of the development remains uncertain, especially with the rezoning application still under review by city staff.
It's a reminder of the complex financial landscapes developers navigate. While the project had promising plans, including schools and outdoor spaces, the financial stability needed to see it through is critical. I hope for a resolution that benefits both the developers and the community.
Indeed, Janine. The potential impact on Barrie's housing market is significant, given the scale of this project. Keeping an eye on how this unfolds will be important for stakeholders and local residents alike.
Absolutely, Steve. Let's hope for a positive outcome that aligns with the community's needs and aspirations. As always, we'll continue to follow developments closely and keep our listeners updated.
Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time and stay informed with the latest industry insights.